These are quick, actionable steps you can take this week that will help you keep your financial health in check. Hello and welcome to Practical Personal Finance, where you get the information you need to understand and succeed with money. Today, I'm going to share with you my top 5 easy ways that you can improve your personal financial health this week. Each of the 5 suggestions are quick to implement, easy to understand, and actionable. And a quick note before we get started. This video was made possible in part by Cover. More on that in just a few minutes. Kicking off this list at number 5 is taking inventory of all of your debts. When's the last time you tallied up all of your student loan, auto loan, and credit card balances? Grab a good old-fashioned pen and paper. It helps to actually physically write this stuff down. For each debt you have, write down who you owe, the balance or amount you owe, and the interest rate. If this is your first time taking inventory of your debts, or it's been a while, you might be surprised at the total amount you owe or the interest rates on some of the debts. Don't worry, I've been there too. The first step to becoming debt-free and taking control of your financial destiny is to gain a full understanding of what you're up against. And that's what you're doing right here. A common question people have about paying down their debts is, which one should I work on paying down first? Some people will tell you to use the debt snowball method and pay off the debt with the smallest balance first. Others will tell you to use the debt avalanche method and pay off the debt with the highest interest rate first. No matter which method you choose, the fact that you've listed out all of your debts and taken the time to understand who you owe, how much you owe them, and what interest rates you're working with is a major step in the right direction, and it shouldn't take you more than an hour to do. Number 4 is to shop your car insurance policy. I'd be willing to bet that you picked out your car insurance a while back, and it's just been on autopilot for at least 2 years now, automatically renewing every 6 months. If you could manage to shave just $9 per month off of your bill, that's over $100 per year in savings. Even if the whole process takes you 2 hours, you'd essentially be getting paid more than $50 per hour to fill out forms and make a few quick phone calls. Sounds like a deal to me. To shop your policy, you could fill out applications with a number of different insurance companies, but wouldn't it be great if you could fill out a single application and get quotes from multiple companies? That's where the sponsor of today's video, Cover, comes in. Cover is an amazing app that lets you buy car insurance in literally the easiest way possible. You simply download the app, create an account, answer some basic questions, and bam, in just a few minutes, you're presented with several different options for car insurance. I tried it myself and it's really that simple. With Cover, you get access to an insurance advisor you can reach out to by text whenever you like, and rates can be as low as $35 per month. Cover specializes in car insurance for young drivers, especially those who are trying to build up their experience and credit. So whether you just got your license, you're fresh out of college and finally getting a policy of your own, or you're just looking to save some money, use the link in the description to download the Cover app and get your free quote today. Moving on to number 3, come up with a plan for how you're going to spend your money over the next 30 days. This is your game plan for money management in the coming month. It doesn't matter if it's the beginning, middle, or end of the calendar month we're currently in. Your spending, for the most part, tends to be consistent from month to month. You'll have some fixed expenses like your rent or mortgage payment, internet and TV bills, and insurance premiums. You'll also have some variable expenses, which you might have a little more control over, like spending on restaurants, entertainment, and hobbies. There's no rule for how much or how little you should be spending on the fun stuff, but it should be in line with what you're trying to accomplish financially. For example, if you're trying to save up for a down payment on a home, it wouldn't help if you spent all of your extra cash at restaurants this month. Coming up with this plan for how you're going to spend your money is a highly impactful exercise because it gives you the power to use this amazing 2-letter word, no. If you've already made that plan for your money and written it down, you'll be less tempted by impromptu activities with friends, the sale on that new gadget, and the allure of those fast food commercials on TV. You've given yourself permission to say no to those things because they weren't part of your plan. This is how you stop overspending and start achieving wonderful things with money. Create a spending plan. Number 2 is setting a brand new financial goal for yourself. What are you striving toward financially right now? Are you trying to pay off your student loans, save up for a new car, purchase your first home. No matter where you're at with money, you need to have that goal that you're striving toward. If you don't see that progress on a regular basis, you'll start to feel like you're treading water and you'll become frustrated with things like your job, your car, and your living situation. Without a goal, it's more likely that you'll overspend or go into debt in an effort to feel like you're getting somewhere in life. The best goals have 5 elements, and they're what I like to call SMART goals. SMART being an acronym, of course. S stands for specific, having a very clear idea of what you want to accomplish. M stands for measurable, being able to quantify your progress toward the finish line. A stands for achievable, something within your control that's practical for you to do with the resources you have access to. R stands for relevant, something that matters to you personally. And T stands for time-bound. Every goal needs a deadline. A great example of a SMART goal might be, I'm going to pay off $36,000 of debt over the next 12 months. It's clear what you're trying to do, you can easily track your progress, it's not out of the realm of possibility, it fits in with your overall future goals, and you've got a specific number of months to get it done. Big accomplishments start with SMART goal setting. And finally, the moment you've been waiting for. The number one way to improve your financial health this week is to crack open a new book on personal finance. When's the last time you read a non-fiction book about money? I bet you it's been a minute. Head to your local library and check out a money book. Not sure which book to read? No problem. I made a video with my top 5 favorites and I'll leave a link down below. Commit to spending just 10 minutes per day reading this coming week. You're bound to learn something new, and it could end up having a tremendous impact on your life. Do you have any other tips for improving your financial well-being? Let me know in the comments. Thanks again to Cover for sponsoring this video. Check out the Cover app for a free auto insurance quote using the link below. If you enjoyed this video, you might like my video where I talk about 7 financial mistakes I made in my 20s. Click right here to watch. And if you're not yet a PPF subscriber, click right here to hop on board. As always, thanks for watching. I'm Andrew Shear, and I'll see you next time.